Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me from the Delhi studio is Aishwarya Anand. These are the top headlines from the startup space. Reliance Retail will foray into the FMCG business this year, says Isha Ambani. Meta and Jio Platforms also launched Jiomart on WhatsApp, promising a first-of-its-kind end-to-end shopping experience on the messaging platform.
Early-stage venture capital firm Iraq Ventures announces the launch of a new fund with a target corpus of $100 million. The VC firm plans to invest in 18 to 20 startups over the next 3 to 4 years in sectors such as insurtech, enterprise SaaS, and climate tech.
Axum Trademart, a B2B startup into raw material supply to MSMEs, plans to raise $25 million from investors to fund its expansion plans. The company has hired a boutique investment banking firm to help raise capital. The company is in discussion with early-stage investors and family offices to meet the capital requirements.
Zomato kicks off a pilot test of delivering groceries via Blinkit on its main app. The pilot test is currently being organized in select circles in Delhi NCR, and after analyzing the response, it will be expanded to other cities as well, company sources told INS.
Chinese tech giants record their worst quarterly growth in the second quarter of the year. E-commerce firm Alibaba posted its first ever flat year-on-year quarterly revenue growth, and social media and gaming company Tencent reported its first sales decline on record. JD.com, China's second largest e-commerce player, posted its slowest revenue growth in history, while electric vehicle maker XPeng posted a wider than expected loss as well as weak guidance, as per a CNBC report.
NASA calls off the liftoff of its giant new moon rocket, the Space Launch System, due to an issue with an engine bleed. SLS is the most powerful vehicle ever developed by NASA and is expected to be the foundation of its Artemis project, which aims to put people back on the lunar surface after a 50-year absence.
Those were the headlines that we're tracking for you this evening. But on What's Brewing today, one of the big takeaways from the Reliance AGM included the company's foray into the FMCG space. Speaking at the company's 45th AGM, Isha Ambani, the executive director of Reliance Retail Ventures, said that the company would be launching Jiomart on WhatsApp, promising a first-of-its-kind end-to-end shopping experience on the messaging platform. Take a look.
We launched our WhatsApp Jiomart partnership, which I would now like to demo to you. Let me now open my WhatsApp. To start your shopping experience, you can simply say hi to the Jiomart SmartBot in WhatsApp, and Jiomart will send you a link to get you started. I already have this link, so I'm going to click on it to get started. Immediately, we're transported from the usual chat interface of WhatsApp to a more visually engaging shopping experience. From here, you can browse the entire Jiomart catalog, which is neatly organized into categories and subcategories. I was able to complete my entire shopping journey within WhatsApp itself, and that too within seconds. Of course, I will get updates on the order status until delivery. It was as simple as that.
Meanwhile, Meta founder and CEO Mark Zuckerberg spoke about the collaboration in a Facebook post, and I quote, "Excited to launch our partnership with Jiomart in India. This is our first ever end-to-end shopping experience on WhatsApp. People can now call, buy groceries from Jiomart right in a chat, business messaging in an area with real momentum and chat-based experiences. Like this will be the go-to way people and business communicate in the years to come."
All right, moving on. Metalbook, a digital supply chain platform for the metals industry, has raised $5 million in seed funding led by Axela Ventures. The round also saw participation from Fundamental, RTP Global, Stride Ventures, and a few angel investors. Joining us now to discuss their growth store plan is Pulkit Baldev, the co-founder of Metalbook. Pulkit, thank you so much for joining us on the show. Let me start by asking you, you're a digital supply chain platform for the global metal industry. Can you tell me how you use tech to make the experience seamless for your customers?
First of all, thank you, Aishwarya and Arundhati, for having me here. It's a total pleasure. As Metalbook, we are digitizing the whole metal industry on a global scale. The size of the industry is almost $3 trillion. So when we started the idea, when we saw the Indian industry, so the Indian metal industry, the iron and steel industry, somewhere around $120 billion in size. Even though we have seen a lot of digitization taking place in the field of groceries, apparels, electronics, but even though the size of the industry is so huge, but still the procurement was in a very orthodox manner. Hence, we started the digitization of this industry. And today we are offering a hassle-free procurement to the customers. And today we are enabling more than 20% cost savings for the customer. So that has been the aim behind the company and vision for the same. Yeah.
Now, steel supply chains represent a large market that forms the backbone of manufacturing and infrastructure, especially at a time when commodity access has been upended across the world. So what made you decide to enter the steel industry to build a tech-led supply chain system for them?
Because the reason behind entering the iron and steel industry to begin with, we could have entered with aluminium, zinc, etc. But we saw that there were a lot of inefficiencies in the iron and steel industry. The ticket size of the industry is so high, but still the procurement processes that were being used were of orthodox in nature. Still, the procurement were done through mails or WhatsApp communication. We thought, why, if today we can procure material or items through Amazon or Flipkart, why cannot we create an Amazon or Flipkart for the metal industry?
Right.
See, iron and steel industry was our first commodity through which we entered the market, but sooner or later we'll be venturing into aluminium, zinc, and other metals as well.
Right. Actually, we'll discuss that a little bit in detail further on the show, but you've raised $5 million. So what's the fund allocation plan? Where's the money going?
So today we have recently, in the last few months, we have recently got our import-export code. So we have been we have made our presence felt in the neighboring countries like Nepal, Bhutan, Bangladesh, Sri Lanka. So today with this fundraise, we'll be expanding our presence to 12 new geographical locations across the globe. And today we'll be using this fund to expand our supplier as well as customer network. So that today, as you know, that India is currently the second largest producer of steel.
Right.
And we want that the world should use the processed material that India produces. We want the Indian-made steel to be used across the globe. So that is how we'll be using our funds.
So that's the main aim, to make Indian steel available across the globe. But you're a company that's just raising your seed round, and impressively, you're already profitable. So what are the margins you're currently working with, and what is your top line? Where will you end this year?
So running profitable was always our key goal.
Right.
We started our company last year, and that has always been our core competency, that will be maintaining profitability throughout our journey. Last year, we did a revenue of over 100 crores. That is among one of the highest revenues recorded in the first year. So this year, we have been growing exponentially, and we are expected to close with a ARR of somewhere around 500 crores. And we aim that by FY24, we have an ARR of somewhere around $100 million.
Okay, so by FY24, an ARR of $100 million. Now, talk to us about what you have on offer. You said earlier that you're going to go into further other categories as well. So what are you currently, right now you're only in iron and steel. So what are the other categories you're looking to expand into, and how soon will that happen?
So we are looking to expand into aluminium and zinc once we have gained significant market share in the iron and steel industry. So still we are a small player. We have begun our journey. Once we have made our presence known and we have gained a commendable market share in the Indian industry, and then on a global scale, then we'll be venturing into other metals like aluminium, zinc, etc.
All right. And now that you have an exports license, how many geographies are you looking to enter at this point?
So we are targeting more than 12 countries across the globe.
Yeah.
So we have already partnered with our neighboring countries like Nepal, Bhutan, Bangladesh, as I mentioned. Now we are aiming to expand our presence in the Middle East and the SEA market. And that is what we are currently looking at.
So you're currently focusing on expanding in the Middle East and SEA markets. Now you work with 500 global metal manufacturers, dealers and suppliers across the value chain, and currently cater to over 350 customers, providing them with a premium metal procurement experience. So what's your experience been like working with all of them?
So initially the journey was very hard. The reason being that we are basically driving a behavioral change. The ticket size of this industry is very high. It is a capital intensive industry. So when we entered the market, we were the first company to digitize the supply chain and to drive that behavioral change that no, you can procure metal online and you can have a high quality product as well as cost savings of more than 20%. That driving and breaking that ice with the customers was very difficult in the beginning. But once the customer got a taste of our services, the processing that we were providing, and the hassle-free procurement that they were having with us, that enabled a lot of traction for us. So with this, so for us, our aim has always been that we need to maintain a good and a pleasant customer experience, so that this metal industry comes out of the orthodox procurement method, and we penetrate the tech in a manner that today you can order metal online sitting at your home.
Absolutely. All right, Pulkit, thank you so much for joining us on the show, but we're completely out of time.
Thank you.
Moving on, the online retail market in India is expected to grow at 32% over the next few years, with a potential to reach $225 billion, according to a recent study by Ecommerce and Vizier Advisors. Now, with the online retail market entering a hyper-growth stage, it has also led to a rise of e-commerce enablers and software providers to help these companies tap into the new wave of digital businesses. I caught up with Kapil Makhija, the CEO of Ecommerce, to understand the role of enablers and tech giants in propelling this growth. How do the investors see the market growing, and how can startups tap into this opportunity? Take a look. India's e-commerce market is projected to grow to $188 billion by 2025, according to a report by IBEF. Digital payments, hyperlocal deliveries, analytics-driven consumer experience, and digital marketing have contributed to the sector's growth. Now, as more and more players join the online bandwagon, the e-commerce players have started deploying the state-of-the-art technology, realizing that they need a platform that provides integrated end-to-end solution and offers the convenience of plug-and-play. And one such startup that's enabling D2C brands to scale their business to next level is Ecommerce.
Ecommerce's warehouse management solutions help brands manage and automate warehouse workflows, from picking, packing, and the dispatch of goods, as well as procurement of goods at the warehouse.
In the e-commerce space, right, the order management system is a critical part. It's a central nervous system. In a sense, that's how it's evolved into now, right? I mean, which means that as the brand scales, as the organization scales, your nervous system should be able to manage it. So, and I think that's where Ecommerce has been able to hold up and scale. A lot of brands technically are not able to reach that point because of the infra not supporting it, right? So I think in that sense, it's really helped us. The numbers are spoken. I mean, more than 200% increase, right? I mean, the last 1 year.
Ecommerce currently provides its solution to over 7,200 warehouses and manages over 96 million SKUs for various sectors such as FMCG, beauty and wellness, fashion and accessories, along with eyewear. Some of its clients include Amazon, Flipkart, Myntra, Shopify, FedEx, Delivery, Blue Dart, Shiprocket, among others.
Earlier, what would happen pre-pandemic? One would park the inventory in various marketplace warehouses. And so all this back-end tech stacks, omnification, D2C, all these words were not there and they were not required. But what is happening and what is increasingly accelerating as we speak is that now brands have to keep maybe the inventory, the single inventory which is lying in their warehouse or in their stores can now be listed across maybe 10 different online sales channels for it to have the best opportunity to sell. And that's where players, where that's where technology and players like Ecommerce are very, very critical.
Besides the integrated order management, the SaaS-based company processes over 20% of India's e-commerce volumes, with over 1 million daily transactions and $5 billion plus in GMVs annually.
A report by Ecommerce and Vizier Advisors have highlighted that the D2C brands are riding the growth in India's e-tailing space with a robust 45% compound annual growth rate and the potential to reach $70 billion over the next few years. The report has also shown that shoppers from Tier 2 and Tier 3 cities have accounted for 61.3% of the overall market share in FY 2022, whereas Tier 1 cities have indicated a slower growth in the order volumes.
The order volume from Tier 2 and Tier 3 cities grew at almost double the pace of Tier 1 cities, with 92.2% and 85.2% year-on-year growth in FY 2022.
So we've seen e-commerce picking up a lot in the Tier 2, Tier 3 towns. When the pandemic started, the supply chain was disrupted for these towns. and e-commerce came to the rescue, and then the consumers got hooked on to the online channels. And since then, we've seen one, they get a wider product assortment from e-commerce, and hence these consumers are shopping online. Two, they are able to get, thanks to the platforms like Meesho, etc., which made a lot of affordable products being available for the price points that they want. Third factor is we are seeing growth in the metros actually maturing, because of which horizontal players like Amazon, Flipkart, Snapdeal, all of them are looking towards the tier 2, tier 3 towns. And not just consumers, we are in fact seeing a lot of suppliers actually coming from these smaller towns.
The report has also showed that the e-commerce industry has been witnessing a 69.4% growth in terms of order volume just in FY 2022, right? So which are the top categories in the e-commerce segment that have registered this kind of growth, and by how much?
The earlier years of e-commerce were largely ruled by fashion and electronics, but over the last 2 years, particularly post-pandemic, we have seen some of these niche sectors like beauty and personal care, health and pharma, FMCG and agriculture actually pick up, and they have demonstrated the highest growth. Beauty and personal care 140% plus, and both health and pharma and FMCG and agri have reported 70% plus growth.
What are the key emerging trends in the e-commerce and retail segment that you see happening in 2022?
One is rise of D2C. We've seen website volumes consistently higher than marketplaces. This year, website grew 80% versus marketplaces grew at 60%, getting an average of about 70%. Second trend is rise of omni-channel. That started with fashion sector. Chumbak is an example which is with us. They are operating their 70 plus stores on us, and we are seeing even the marketplaces like Myntra, Flipkart, Amazon encouraging the brands to list their store inventory. Third trend we are seeing is the rise of social commerce. Not just WhatsApp-based commerce, but also reseller commerce with Meesho powered. We are very bullish on is Indian D2C brands actually going global.
Ecommerce is now planning to add 800 warehouses to its network this fiscal. The company is also looking to enter into new categories like sports and home decor.
With the pandemic giving a boost to the digital-first brands, the e-commerce enablers have mopped up $496 million in equity funding last year, a five-fold jump from 2019 as per data sourced from Traction. This year, the e-commerce software providers have raised $476 million in funding if the unicorn brands of Elastic Run and Commerce IQ are to be accounted for. While the potential is immense for the e-commerce enablers, there are challenges too in terms of e-commerce trends changing and the pricing disruption as startups change the way India shops online. With camera person Saroj Singh and Rajinder, Aishwarya Anand for CNBC-TV18.
On that note, it is time for us to head into a short break. But coming up next, fasten your seatbelts as TVS Motors invest in Narayan Karthikeyan's Drivex. A special conversation on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. Every year, the 29th of August is celebrated as National Sports Day. And to mark the date, we bring you a special chat with India's motorsport icon turned entrepreneur Narayan Karthikeyan. Given his passion for automobiles, it's no surprise that Narayan runs a pre-owned two-wheeler platform, Drivex, which recently raised funds from TVS Motor Company. To talk about the road ahead for his venture, joining me on the show is Narayan Karthikeyan, who we all know was the first Indian to become a Formula One racing driver. Welcome to the show, Narayan. Narayan, you've received the backing of one of the leading automobile companies in India, TVS. How will this partnership help the startup scale its operations, and also what made you think of launching a pre-owned two-wheeler platform?
Yeah, I mean, thanks, Akhil. It's been an awesome journey, and in less than 24 months, we built this platform, Drivex, which primarily we are into the pre-owned two-wheelers in terms of both the subscription and the sale model of these vehicles. We feel that this has a lot of opportunity in India, especially catering to the affordable mobility. Yeah, so we primarily are operating in Tamil Nadu and in Karnataka. And yes, of course, with the TVS Motor Company coming on board, we have, our vision is pan-India. And the vision is very clear. We believe that, we can build this platform and make it, one of the largest pre-owned two-wheeler platform in the world. That has to be the vision, and that's how we all look at it.
Narayan, you founded Drivex in the early days of the pandemic. Take me through the challenges you faced and tell me how the business model has evolved.
Yeah, so personal mobility during the pandemic was, everyone was the need of the hour, really. And we felt that, at that time, we got into the subscription and the lease model, August 2020 to be precise. And from then onwards, we have two clear verticals. One is the subscription and the lease model, and the other is the sale model of these pre-owned two-wheelers. You may ask why, two-wheelers and not four-wheelers. The simple reason is that the market size is much larger. Buying a pre-owned two-wheeler seems to be a pain point for the customer. So we realized all of that, and then we put together a platform.
Now, given the shift in preference for personal mobility and global supply chain disruptions, we are seeing a surge in demand for pre-owned vehicles. What kind of traction are you witnessing on your digital platform in terms of sales and subscription? Also, give us a sense of the consumer profile.
The business is still small, but 80% of our revenues comes through the sale model, 20% through the subscription. The subscription, the concept of subscription and lease, of course, is much more easier in tier 1 cities. And there's a lot of traction we see on this. And in tier 2 and 3 cities, and we are in a tier 5 as well, the sale model seems to be having a lot of traction. In many of the cities which we have experiences, they're very aspirational. And, so somebody who's riding a entry-level scooter might want to, get the next level of a sport bike, a 150cc bike, and so on and so forth. So we're witnessing a lot of these changes happening. And, we feel that this is a, huge, potentially a, 11 million unit market per annum, and that keeps growing. And as you said, there are so many factors that, chip shortages and the affordability point of view, and so on and so forth. That is a large demand for these vehicles.
Naren, now let's talk some metrics. Can you break down the revenue and growth numbers for us and take us through the targets you've set for yourself for this year and the next?
We've set our sights on expanding it pan-India, and that's what we would like to do. Right now, in 2021, we did a top line of about 49 lakhs, and then we grew to about 9 crores in the corresponding year. And we feel that we have the potential to grow this 20x in in 22-23. So that's where we are.
Moving on, there is a great deal of debate around sustainability, not only within the automobile industry, but also in motorsport. What's your opinion on the electric vehicle revolution, and what are the gaps that need to be plugged?
The shift to EVs will happen in some countries much earlier than other countries. It's a point of affordability. The technology in these are fast changing, and so forth. But what we need to also consider the ICE engines. Yeah, they have become much more greener, and so the efficiencies are they burn much less, and the efficiencies have grown a lot through the years. And yes, no other place better than motorsport. Of course, Formula One is uses hybrid technology. We have a Formula E championship, which is pure electric. So it's a great R&D center. Motorsport it's always been, and everything from smaller capacity engines to turbocharging, all your traction control, ABS, all of them were first introduced in Formula One, and then it's trickled down to our everyday use. So similarly, while this EV revolution is happening all over the world, in some countries, as I told you, it's going to take a bit longer, but it's definitely the future. So that's everybody realizes that, I think.
Naren, one final question before I let you go. How has your journey been from being a Formula One racing driver to now being an entrepreneur?
I think motorsport in the whole, is a business. Formula One especially is a sport, but it's a very complex business as well. So I have had a lot of exposure, and I can relate many parallels to being an entrepreneur and motor racing, Formula One especially. So I believe that the exposure is quite immense in my case. I never thought from Coimbatore I would go and race with Michael Schumacher and break barriers and so on and so forth. So I always have the will to succeed, and I believe we have a great platform, and I believe in myself and my team. Teams have always been very crucial in my career, and so in Drivex as well, it's going to be a similar kind of scenario. So you can see there's a lot of parallels between Formula One racing and what I do now.
Naren, thank you so much for joining us on the show today. It's been an absolute pleasure talking to you. We wish you the very best of luck with your venture. With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side.